Okay, last day we did the basics of how to do the diagram. Today we will be starting with the topic properly. Last day we learned what? That y is equal to c plus I. That would be the equilibrium condition in each and every diagram. Like where the aggregate demand and supply approach is there only in that diagrams. Now see what we can say, why अगर हम लोग का income हो रहा है, that is the only way we will be able to supply, right? Income हो रहा है इसीलिए we will be supplying. So that is why what we can say that y is our AS as well. AS as an aggregate supply of all the people in the economy, right? So we can say y is our AS. And see, what can we say our C plus I is? What do we know aggregate demand का formula in a closed economy? C plus I plus G. Now what did I say in the last session? That in maximum diagrams we will just be taking C plus I only and until, like in the question, if it is not said कि we have to take into account our government as well, we will skip that part. So C plus I is our formula for aggregate demand. We can say what? Just as y is equal to c plus I, we can say that AS is equal to AD. Now, why do we know? Why do we say that y is like our supply is our income as well? Because अगर income हो रहा है, only then we will be able to supply, and that is for this case. And for this one is what? अगर हम लोग का demand है, only then we can divide that sector into C plus I as in the demand of consumption of the consumers of us and investment sectors. Now, what can happen? What are the three conditions that can happen? We will just study this before starting with the diagram. What are the three conditions that can happen? It can be so that y is equal to c plus I, or it can be that y is greater than c plus I, or y is lesser than c plus I, right? So y is equal to c plus I मतलब हम लोग क्या बोल सकते हैं that as is equal to ad as well, right? Or we can say as is greater than ad, or we can say that as is lesser than ad. ठीक है, you need to understand the concept properly before doing the diagram, because no matter how many books you study, if the diagram, like it's not mandatory कि book से diagram आएगा. If you know the concept, you can make your own graph itself. Now see, अगर supply is equal to demand मतलब we are meeting our equilibrium condition here. Let's do the diagram as well beside this. Now see, what did I say in the last class? We have to draw our investment curve, right? This is what? This is our autonomous investment. If it is written in the question that you have to draw an induced investment, तब ये line curve हो जाएगा, right? Now what do we have to draw? We have to draw our consumption line. This is our consumption line, and we have to draw what? Our C plus I line, right? Consumption plus investment line, all together we will be drawing it here. So C plus I line. Now the last thing that we have to draw is, sorry, the last thing that we have to draw is our income line, which is a 45-degree, and you have to mention the 45-degree here. Now see what is happening. Where is the equilibrium point meeting here? What is our equilibrium condition? Y is equal to C plus I. So at the point where y is equal to c, y is cutting c plus I, that would be our equilibrium point, right? So we can name this as E, and we can say, just because this is our income line, so we can say that YE is our equilibrium level of income. Now what is happening here? The condition is meeting each other and it is satisfying the condition that y is equal to c plus I. Now if in case your income is y1, then what happens? If your income is y1, then it is touching this point, right? We are naming this as F suppose. यहाँ पे क्या हो रहा है? This is our C plus I line. Now what do we know? What is our C plus I? We can also refer that to as AD and our income line as AS. Now what is happening? यहाँ पे अगर AD है, if this is our AD and this line is going over the line of income, right? Just look at the diagram properly. If our AD is above our AS line, what can we say? That our AD is greater than AS here, right? This is our AD line, this is our AS line or income line and C plus I line, right? Now, if our demand is more than supply, if in a business firm the demand is more and supply is less, then what happens? What will the producers do? The producers will increase the production, right? Because supply is not so much, but demand for goods is there, so production will be increased. Now if production is increased, obviously employment opportunities, as in the investors, like the business, in the business firms, there will be employment opportunities and employees or laborers will be taken. So employment opportunities or employment will increase as well. Now if employment increases, then what increases as well with that? Now see, agar employment is increasing, if employment is increasing, as a result everybody is having money in their own hands. So at the end our main motive would be to show that our national income is also increasing. Now see, when people are having money in their own hands, they will be doing their consumption as well. But our consumption will be, the line that we have to mention is our consumption is increasing along with our income, but our consumption is not increasing as much as that of income. Why? Because at a particular point of time, our consumption opportunities, like our basic needs, would be satisfied. So at a point of time there will be something, like if there are any luxurious needs or any like emergency, only then we will do our consumption, but our basic necessities, that has been fulfilled after a particular point of time. But in each and every year, each and every month, if you are looking at it from a realistic point of view, then what is happening? Our consumption is not the same, right? So what is happening? If our demand is more and supply is less, the producers will be increasing their production. If the production is increased, then the employment will also increase as well. As a result, our national income is also increasing. But between these two lines, we have to write what? That our consumption is also increasing, like the consumption of the people is also increasing, but it is not increasing as much as that of income. And at the end, what is happening? Our national income is rising as well. Now if our we have been discussing this part, right? Now if our national income, or if our income was Y1, our main motive would be to push it forward and bring it to YE, right? Because YE is our equilibrium level of income. Now at this point, when our income is YE, what do you basically have to write in your answer? Because in many books there will be given like points after points. When you're given such type of question, you have to determine the equilibrium level of income first, equilibrium conditions first, sorry. What is your equilibrium condition? That Y is equal to C plus I and AS is equal to AD. This two would be your equilibrium conditions. Then what do you have to do? You have to state this point, like you have drawn the diagram, you have to explain it properly. Where you are drawing the investment line, your investment is autonomous here, and if it has been given induced, you have to say that it is induced. Then you are drawing the consumption line, then your C plus I line, then your Y line, which is a 45-degree. Now what is happening? You are drawing the point where the two are cutting each other. You are naming that as E, or whatever name you are wanting to give, you can do that. And then you are dropping the line downward, and that would be your equilibrium level of income, YE, right? So that is what you have to write first, that at YE and E, Y is your level of income, and at E both the conditions are satisfied, that is Y is equal to C plus I and AD is equal to AS. Then what do you have to do? you have to say that if your income is Y1, then what will happen? Then your AD is greater than AS, and if your demand is more, then what will happen? The producers will increase their production. As a result, employment will increase, and then the consumption will also increase, but consumption will not rise as much as that of income, and at the end, finally, national income increases. In this question, if it is normally said that determine the equilibrium level of income, then just this much will do, not this much, you have to like write y2 as well, that I am explaining. But what I am trying to say, if it is just given determining the level of equilibrium, then this one is fine. But in the question, if it is mentioned that you have to talk about your inventory as well, then you have to add a specific line in all the conditions. यहाँ पे what do you have to write? If your AD is equal to AS, then it means that there is no change in the inventory, because whatever has been there in your inventory, that has been supplied, right? So यहाँ पे there will be, your inventory will be constant. Your inventory is constant here. But in this one, what is happening? Your demand is more, and whatever is there in your inventory, it has already gone out. So there will be a negative change in your inventory. Now, in the question, there might be a word such as accumulation or decumulation. Decumulation as in there is a negative inventory, things are going out of your inventory, and accumulation means there is a plus in your inventory or positive change in your inventory. I hope this much is clear to everyone. Just the first portion, that when your income is YE and when your income is Y1, you have to push it forward to Y. Is it clear? Is it clear to everyone? Now, if your income is Y2, then what happens? Same thing, you will be dropping a line downward, and now what you are saying, यहाँ पे your supply or your Y line, that has gone up to your C plus I or AD line. So यहाँ पे what you can say, that your supply is more than your demand, right? Now, if your supply is more than your demand, if in a business firm the supply is more, then what happens? The producers, just the opposite of this, the producers, they will do what? They will decrease the production, right? As a result, employment will decrease as well, because if they are not doing the production, they wouldn't keep employees who are sitting idle. So employment will also decrease, and consumption will also decrease, but it will not decrease as much as that of income, right? And then your national income, as a result, your main motive would be what? Why to say you have to push it backward to YE, right? So as a result, what is happening? Your national income is decreasing, and again your equilibrium level of income is coming back to YE and is meeting your equilibrium condition at point E, where Y is equal to C plus I or AD is equal to AS. I hope this diagram is clear to everyone. Okay, so this is the basic diagram that you are given, like this is actually the diagram that you are given for aggregate demand and aggregate supply approach. Now, what can be the three types of question? If in the diagram it is just given determine the equilibrium level of income, then also you have to determine the level of income, and you have to talk about when your income is Y1 and when your income is Y2, because you might say that only you in the question it is given determining the level of equilibrium of income, but you have to talk about all the three, what is happening if it goes backward and what is happening if it goes frontward. And other two questions can be what? That your यहाँ पे what is happening, your aggregate demand is more than aggregate supply. They can also ask that if aggregate demand is greater than aggregate supply, then you have to determine the equilibrium level of income, or what is happening to the income at that time. For that also the answer would be the same. You have to determine the equilibrium level of income, and you have to talk about both the conditions. Same for here, if your supply is more than your demand, if that question also comes, basically if whatever the question comes, you have to write the answer from all the three perspectives, like equilibrium level of income, if it is more, if it is less, everything you have to write in the answer. I hope it's clear to everyone. Okay. Now see, the next thing, the savings and the investment approach, we will be doing that in the next class. But today we will do certain things like I discussed MPC in the last class. Now, what is MPC? MPC is delta C by delta Y. Delta C by delta Y as in how much your income is changing, depending on that how much you are willing to change your consumption, that is your MPC. Now the question that can come is, why shouldn't MPC be lesser than 0 and greater than 1? The main condition is MPC should always be greater than 0 and lesser than 1. But the question might be this, or it can be what? Why can't MPC be lesser than 0, as in why shouldn't it be a minus value, and why shouldn't it be greater than 1? Okay, now MPC, what is MPC? We have learned it that MPC is what? MPC is when your income is changing, depending on that you are willing to change your consumption. Now, why shouldn't MPC be greater than, lesser than 0? If MPC is lesser than 0, it would mean that you are not consuming anything. MPC का full form होता है marginal propensity to consume, right? So, if it is lesser than, or if it is a minus value, it would mean that MPC, you are not doing any consumption, you are spending all the money, or you are saving all the money basically, right? So it should always be greater than 0. And why shouldn't it be greater than 1? Because if MPC is greater than 1, then what is happening? It is basically that your income is lesser than your consumption. That is why your MPC is greater than 1. But that is not the case. Like, it can be the case that in reality we do what? We might borrow money from someone and spend it no matter what our income is. But according to like logical thinking, we should always spend lesser than our income, because there should be a part of our money that should go for savings. So what is happening? So I guess it is clear. Okay, MPC, just write down these few points. MPC shouldn't be lesser than 0, because if it is lesser than 0, it would mean that all of your money is going for savings and all savings and no consumption. That is one point. And MPC shouldn't be greater than 1. Greater than 1, because it would then mean that your consumption is more than your income. This is the reason why MPC should always be greater than 0 and lesser than 1. It's clear? It's clear to everyone? Okay. Then the next question that comes is, state the relation between APC and APS. And another thing is MPC and MPS. Okay. So for this, what you will do, you will start writing the answer by like this: y is equal to c plus s. Now see, whatever our income is, we dispose it in two forms, that is our consumption and our savings. A part of our income we give it into our consumption, and a part of it we give it into our savings. Now that is how we will start writing the relation. Now what is happening? We are doing what in the next step? We are dividing both sides by y. Dividing by y. So, sorry. Okay. Now, this is our 1. What is the formula for APC? APC is C by Y. So, we can write APC as C by Y. And I didn't explain in the last session the meaning of APS. APS is what? The part of our APC. APC is what? We are basically doing our consumption based on our savings. We are finding out the average of that. And APS is what? The full form of APS is average propensity to save. Now, APS, what is the formula of APS? APS is S by Y, as in depending on our income, how much we are saving. That comes under our APS. So, we can write S by Y as APS. So, this is basically our relation between APC and APS. Or you can write what? APC is equal to APS minus 1, or sorry, APS is equal to APC minus 1. The APC and APS part is not so important. The main important thing is MPC and MPS. This is very important. It comes in your exams as well. So I hope APC and APS is clear. What are we doing in the first line? We are doing what? We are disposing. Y is our income. We are disposing it into two forms. That is our consumption and our savings. Then in the next line, what are we doing? We are dividing both the sides by Y. So Y by Y is equal to C by Y plus S by Y. Now C by Y is what? Our formula for APC is C by Y, and our formula for APS is S by Y. So we are writing down the terms in place of C by Y and S by Y. Or what happens? APC is equal to APS minus 1, or APS is equal to APC minus 1. Okay. Now see, another thing, just remember, like when you are given the relationship, you have to mention another point as well, that when you're like, it's basic common sense that when your consumption is more, your savings is less, and when your savings is more, your consumption is less. So you have to mention that as well after writing the relation, that when your APC is more, your APS is less, and vice versa. But do not write vice versa, kindly write the whole sentence. Okay, like you have to write APS is more and APC is less. Clear? Clear? Okay. Now MPC and MPS. Our formula for APC was not, like we weren't doing any change. We were taking the whole value. But for MPC, what do we know? We take the, what is the formula for MPC? MPC is delta C by delta Y. So basically we are taking the change of the values. For this also we will be doing just the same. We will be writing what? Delta Y is equal to delta C plus delta S. Like depending on our change in income, how much we are willing to give a part of it in our consumption, and how much we are willing to give a part of it in our savings. Right? That is why for MPC and MPS we will be taking the delta value, and for APC and APS we will just write Y is equal to C plus S. It would be the same for this one as well. You have to divide both sides, but with delta Y, not just with Y. Right? So delta Y by delta Y is equal to delta C by delta Y plus delta S by delta Y. Now same for this MPS. I haven't explained MPS as well. MPS is what? Delta S by delta Y. MPC, we already know that how our income is changing. Depending on that, we are changing our consumption. Same for MPS, our income is changing. So the whole part, we won't be giving it into our consumption. Like not everybody, but some of us will do what? We will save some portion of the money, right? So depending on our income, how much we are willing to save, that is our MPS. So we can write what? 1 is equal to MPC plus MPS, right? Or we can say what? MPC is equal to MPS minus 1, or MPS is equal to MPC minus 1. Clear? Or actually it would be, sorry, a bit error. 1 minus MPS. Same for this one as well. It would be 1 minus APS and 1 minus APC. You're basically changing just the sides, so according to that you have to do, right? Now the same thing you have to write here as well. When your marginal propensity to consume increases, what happens to your savings? It decreases. So when your MPC is more, your MPS is less, and vice versa. In your answers, do not write these arrows or vice versa, all these things. Write in full forms. Like when your MPC is increasing, your MPS would be less, and when your MPS is more, your MPC would be less. For like, you don't need to write the whole word marginal propensity to consume. You can write down the short for those, but not these arrows and all these things. Till now clear? Okay. Now another diagram which is important, which is it is related to this one. If this one is clear, then this diagram that we will be doing now, it would be clear to you as well. Now see, the question can be what? The question can be, if your investment is increasing, right? If your investment is increasing or there is a change in your investment. If in the question it is written, if there is a change in investment, you have to talk about both the increase and decrease, and you have to draw both the diagrams separately. And if in your question it is specifically mentioned that increase ho raha hai ya decrease ho raha hai, then accordingly you will do. Now, when your investment is increasing, what is the diagram that you will be making? The same one, that would be your initial diagram. This is your investment curve, right? After that, you will be drawing straight your C plus I, or if you want, you can draw your C as well. This is your C, then your C plus I line. This is your basic diagram that you have to draw. So this is your Y, and this is your equilibrium level of income. Now in the question it is written what? That I am just taking this part, that your investment is increasing. Now if your investment is increasing, then your I naught line increase ho raha hai, matlab it will go upward, right? So your investment line, that is going upward, and that change you can name it as delta I, right? So I naught say increase hoke, what it has changed to I naught plus delta I. Now what is happening? If your investment is changing, it means in the total change of consumption plus investment, that line will also change, right? So we will be shifting that line upwards, and we can write what? C plus I plus delta I. And our equilibrium level of income shifted to YE, name it as Y1, because in these diagrams you won't be said to determine the equilibrium level and what impact it has on the income. You have to do what is your initial income, and after there is a change in investment, what has happened to your C plus I line, right? So when your investment has increased, our total line of C plus I, that will also increase, right? So first our equilibrium level of income was Y1, and then it increased and went forward to Y2. So our national income basically increased. Is this one clear to everyone? Now the second diagram, see, this one was what? Increase in investment. There might be a decrease in investment as well. So you have to know that if you have an idea of this diagram, you will be able to do that one as well. But still I'm showing you. If investment is decreasing, then what happens? This is your equilibrium level of income. This is your investment line. Sorry. This is your consumption line. It would be a straight line. This is your C plus I. And this is your income line. Right? You have to do the initial diagram in each and every one. This is your Y1. Now what is it has been said that there is a decrease in investment. If investment has decreased, then what will happen? When there was an increase, the line went upward, but when there is a decrease, it will go down, right? So I minus delta I. For that one we wrote plus delta I. This one, because it has decreased, we will be writing minus delta I. Now, if this has decreased, then the total line will decrease as well. So, we will shift this line. So, C plus I minus delta I, right? And what happened to our equilibrium level of income? It decreased from Y1 to Y2. Okay, this is the basic diagram that you have to draw, and you just have to give an explanation that where you're drawing what line, that you're drawing your investment line, the initial part. Then you have to determine the first equilibrium level of income, that is at Y1, and then you have to decrease your line. You have to write that in your explanation as well, and as a result your I is decreasing. The total of C plus I line will also decrease. So C plus I minus delta I. Now your equilibrium level of income that shifted from Y1 to Y2. That is basically what you have to write in your answer. Like if you keep on writing pages over pages, it won't fetch you marks. You have to draw the diagram properly and you have to give a simple explanation that everybody can understand. So investment increase and decrease, I hope it's clear to everyone. Okay. Then another diagram that is given to you is change in MPC. Change in MPC and how it is affecting the consumption function and impact on the consumption function. Okay. Impact on consumption function. Now see, for this also it might just be mentioned the change in MPC, but you have to talk about your increase and your decrease as well, right? First we will be talking about our increase. Now when you're drawing your increase, what would be it? Because it has just mentioned that impact on consumption function, so you won't be needing to draw your investment line or your income line, nothing. Okay. Now see, what you're doing, impact on consumption function, as in you just have to draw your consumption line. So this is your consumption line. Take it to be C1, right? Now basically what you have to identify the slope here. MPC is equal to what? Delta C by delta Y. Okay. Delta C by delta Y. Now in simple maths, if you're asked to find out a slope of something, okay, what you basically do, suppose these are your 2 points, x1 y1, and this is your another point, x2 y2. When you're asked to find out the slope, what do? You basically just x2 minus y2, sorry, x2 minus x1, y2 minus y1. This is how you get your slope. Now x2 minus x1, you can call that to be your change in x, and y2 minus y1, you can call that to be your change in y, right? So basically this is the formula of delta C by delta Y. Now if this was suppose C1 and Y1 and this was your C2 Y2, you could have written, okay, you could have written what? C2 minus C1, Y2 minus Y1. So it would have given you the formula of MPC, right? So now what do you have to do? You basically have to get to the slope of it. You have to draw a line like this, join these two lines. Now you can say this is what? This is our income line and this is our consumption line. You can say that this point, this side is your delta C and this side is your delta Y, right? So mark these points as ABC or whatever you want to. You can say what? MPC is equal to delta C by delta Y, or you can say what? It is AB by CB as well. Clear? Now this is your initial diagram. What it has been said that there is an increase in your MPC. Now you are doing what? You are increasing your consumption. So this is your C2 line. Your consumption initially was C1, then you increased it to C2. Now you have to do the same thing. You have to draw the slope and you have to mark your points again. This was ABC. Suppose this is DEF. Clear? Now DE is your delta C and FE is what? Your delta Y. So you can say what? MPC is equal to DE by FE. These are the 2 points that you have got. Now how are you going to justify the increase part? Now see, this portion is the same, this portion is the same for your CB as well as FE. The measurement of these two portions are the same. So you can say what? FE is equal to CB, right? But these portions, the delta C portions of both the diagrams, just look at the measurements. Like it will be just, you have to draw the diagram in such a way that when you are talking about the increase part, your change in consumption, like your C2 line should have a greater value of delta C than your C1 line. And यहाँ पे what you can see that your DE, that is greater than your AB, right? So as a result, the total value, okay. As a result, what you can say that MPC, naming this at MPC1 suppose, and this is MPC2. You can say that your MPC1 is smaller than your MPC2, because what is happening यहाँ पे, if you take the total value, your AB by CB, that is smaller than your DE by FE, because this portion changes the whole game. This portion is greater to this one. These two portions of delta Y is the same, but it is not affecting the diagram. The main thing that is affecting the diagram is what? This portion, your delta C portions. Am I clear to everyone? Okay. This was your increase in MPC. But when you are talking about your decrease in MPC, the diagram would just be the opposite. Then what you are doing? You are drawing the same diagram, but this time you will be drawing the upward line first, assuming this to be C1. You are dropping the line downward, the same thing, and you are measuring your consumption here, naming this to be ABC. So this is your delta C and this is your delta Y. So MPC1 is equal to delta C by delta Y, which is equal to AB by CB. Then what is happening? Your consumption line is going downward and यहाँ पे you are measuring your, this is your portion of, this small portion is your delta C and this portion is your delta Y, right? Naming this to be DEF. Now what you can say MPC2 is equal to delta C by delta Y, which is equal to DE by FE, right? But what we can see, this portion is equal to this one, but this portion, the delta C portion, is greater than the downward delta C portion. So there has been a decrease, because why? Your AB is greater than your DE, or you can say that your DE is lesser than your AB. So just because these two things are smaller and larger to one another, it changes the whole diagram, and you can say that there has been a decrease in MPC. Am I clear? This one is very important, this MPC diagram. Either you will be given just to discuss about the increase or the decrease, and write in simple words. I am saying over and over again, just write in simple words. And what you can do, it will be what? It will be specifically mentioned either increase or decrease. Clear? Okay. As we have done the equilibrium conditions, I am thinking like we can do 1-2 sums today itself. Okay. Sums of the third chapter. Okay. Let's just go to the sums once. Here. Theory of equilibrium income determination. Now see, let the consumption function be expressed as C is equal to, because according to this we can learn a simple concept of Keynesian consumption function as well. That is why I am starting with the sum. Let the consumption function be expressed as C is equal to rupees 40 plus 0.8 YD. Autonomous investment, we already know what autonomous investment is. Autonomous investment is what? Rupees 60. Government expenditure is G, that is 10, and amount of direct taxes, that is T, that is equal to rupees 10. And the net transfer received by the private sector, that is TR, equal to minus 5. Now see, there is a concept of disposable income. Wait. There is a concept of disposable income. What is disposable income? Disposable income is the income that you are receiving in hand after deducting the tax. Okay? Suppose your income is rupees 10,000 for example, and you are paying a tax of rupees 100. So the amount you are receiving in your hand is 9,900. So that is your disposable income, basically the income that you are receiving in your hand, and after which you are not having to give it to anybody else, right? In the sum, there was a portion of transfer payments. Now, transfer payments, I mentioned in the last class, transfer payments are, it was a part of your compensation of employees. Sorry, compensation of employees or something we discussed, but transfer payments was there. Transfer payment is what? Transfer payment is basically old age pensions, then scholarships and all these things which we do not have to give in anything return to the government. So basically that is an income for us, right? Transfer payments is an income for us. That is why we are adding it to our disposable income. So the formula for disposable income is what? This is the income that we are receiving. This is the tax that is getting deducted, and this is the transfer payment that we are receiving, which is an income for us, right? I hope this formula is clear. Okay. Now starting on with the sum. In the sum, it was given that consumption is rupees 40 plus 0.8 YD. Rupees 40 plus 0.8 YD. Now see, what is the thing here? This consumption function, it is given in a specific formula, which is C is equal to A plus B of Y. This is a part of the Keynesian consumption function. Keynesian consumption function, there are certain assumptions. There are 4 assumptions which we will be doing in the next class. We will just see that this is a what? This is a short run consumption function. Short run consumption function of the Keynesian theory. I am just giving a gist of the Keynesian theory. Keynesian theory is what? It is the same thing which I have already stated. Keynesian consumption function, it states that your consumption and your income are both increasing, but your consumption is not increasing as much as that of income. That is basically the theory of Keynesian's consumption function. We have certain assumptions on based of that, but we will be doing that in the next class. But according to the Keynesian consumption function, this is what consumption is represented by. C is equal to A plus B of Y. Now all these things you already know. A is what? Autonomous consumption, right? A is your autonomous consumption. Now B is what? B is your slope, or you can say, I'm just taking this one downward, or you can say that B is your MPC, right? Because when we were doing this one, we already saw that the way to find out our slope and the way to find out our MPC is both the same. So we can say what? That our slope and our MPC is the same thing. So B is what? B is slope of the consumption schedule, or it can be referred to as MPC as well. And Y we all know it's what? It's income, right? So this whole consumption thing, we have 3 parts in it. 40 is our A, 0.8 is our MPC or the slope of the consumption schedule or B, and YD is our disposable income. Now what is the next thing that we have been given? The next thing that we have is autonomous investment, that is 60, and government expenditure is 10. So investment is 60, government expenditure is 10. Then we have amount of direct tax, that is T equal to rupees 10, and net transfer received by the private sector, that is TR, is 5. So tax is rupees 10 and transfer payments is rupees 5. Okay. So tax is 10 and transfer payment is rupees 5. Now see, what is the equilibrium condition that we know? Y is equal to C plus I. This is basically the equilibrium condition. But the government has been specifically mentioned here. So we will be taking our government as well, right? Now this formula, this will have certain additions to it. C is equal to 40 plus 0.8. Now what do we know our YD's formula is? YD is equal to our income minus our tax plus our transfer payments, and we have our tax and transfer payment here. So what we will do here, we will take Y minus our tax, that is 10, and plus our transfer payment. Clear? So we will be writing this thing down here. C is what? 40 plus 0.8, Y minus 5, 10 minus 10 plus 5, we got minus 5. Then what? I is 60, G is 10. What do we have to do from here? We basically have to find out our Y. So what would be the value of Y? Solve it and let me know. Everybody just solve the sum. Solve the sum and let me know in the comment section. And kindly give proper answers, because some of your answers are actually wrong. Y is equal to 40 plus 0.8, in bracket write Y minus 5 plus 60 plus 10. Anybody up with the answer? Take the y to one side. Oops. Let me check. 106. Is everybody getting 530? Everybody? Okay. Then the final answer would be 530. Okay. Is the sum clear to everyone? How are you, like, see, you can do the calculations on your own, but how are you supposed to do the sum? Is that clear to everyone? Okay. Now see, this sum is different from the last one. There are three types of sum in this very chapter. Now this one is what? In an economy, with every increase in income, 70% of the increased income is spent on consumption. Right? What is it saying? 70% of the increased income is spent on consumption. When we are talking about consumption and increased income, it is saying, so MPC would be 70% here, right? Because 70% our income has increased and 70% of that increased income we are spending on our consumption. So that is basically the theory of our MPC. So write down MPC is what? MPC is 70%. Then what do we have? Suppose a fresh investment of rupees 300 crore takes place in the economy. Now there was a part of investment already done, but a fresh investment has been done again. So we can say what? That this is our delta I or change in I. So change in I is what? Is rupees 300 crore. Right? Now what do you have to find out? Let's see. We have to find out delta y and delta s. Okay? So delta y and delta s. We are not given the value of delta y and we are not given the value of delta s. I am doing the sums because when we are doing the sums, our certain concepts which I have still not done with you, those things will be done. Now see, there is a concept of investment multiplier, right? Now, what is the formula for investment multiplier? The formula for investment multiplier is delta y by delta I is equal to 1 by 1 minus MPC, right? So investment multiplier as in depending on your income, your investment is changing here, or you can say the more appropriate thing is what? When you're investing in your business, like the more you're investing, the more there is a change in income, your income will increase with that, right? And that is what? That is equal to your 1 by 1 minus MPC. So the main concept is you are investing in your business, the more you are investing, the more there is a change in your income, right? So this is your investment multiplier, and for this sum you will be using this formula. In this chapter, see the sums from this chapter in the last 3 years, you didn't had a single sum from this chapter, but in case it comes, then you cannot blame me. Okay. So you can do what? MPC. MPC is 70%, delta I is rupees 300 crore. So to find out delta Y, you can use this formula, delta Y by delta I is equal to 1 by 1 minus MPC, right? Investment is 300 crore. 1 by 1 minus 0.70. Now find out the value of delta y and let me know. Everybody is getting 1000. I am not writing down the answer of 1. Okay, so find out the value of delta y and let me know in the comment section if anybody is doing the class. And you, what's the answer?
1000.
Okay, so delta y would be 1000, right? And then you're doing what? So we have got out our this one, delta y is 1000. Now we have to find out our delta s. Now see, when we have our MPC value of 70% or 0.70, we can say what? We know the value, we know our formula, because we have already learned the relation. The relation between MPC and MPS is what? To find out our MPS, we can use this formula. MPS is equal to 1 minus MPC. Okay. So we can say MPS is equal to 1 minus MPC or 1 minus 0.70, which is 0.30, right? Now what we can do, what do we know our formula for MPS is? Delta S by delta Y, right? So MPS is 0.30 equal to, we have to find out our delta S, and what is delta Y? It is 1000. Okay. What's the value of delta S? Anybody got the value of delta S? I hope this sum is clear to everyone. Okay. See, we won't be continuing, we will be doing till this much. We have done two types of sums today, and we have done what? We have understood certain concepts of how to do the diagram. Like these diagrams that I have done today, these are pretty important. And see, all these questions, like maximum of these questions, I am telling you what are the questions that have been given to you in the previous year's paper. That is this one, determining the equilibrium level of income. This one is very important, and not just because this is given in the previous year's paper, these questions are important. This one is not given, but this is important, your MPC one. And MPC and MPS, the relation between MPC and MPS, this is also important. Then this change in investment, I am saying over and over again, if it is specifically mentioned increase or decrease in the investment, it's fine. But if there is just mentioned change in investment, the answer would be a bit lengthy. You have to do the whole diagram. You have to show the increase part, you have to explain it, and you have to show the decrease part as well as explain it. Clear? Then MPC change and the impact on the consumption schedule, or on the consumption function or the schedule. The word schedule can also be given. So you have to talk about your increase and decrease, both the things here, and do not try doing that in a single diagram. In many books it is given in a single diagram, but you will be doing the things in two different diagrams and explaining both the things properly. Clear? Then this one, these two sums that I have done today, understand those and practice those at home. We will be continuing. There is another type of sum, so we will be doing that in our next session, and we will be talking about investment multiplier, balance budget multiplier, because those are the questions that comes in your exam. So we will be continuing that in the next class. Thank you.